Hi, everybody. Welcome to our webinar today. We are so excited to be presenting this information to you. My name is Catherine Ring. I am the Vice President of Marketing for ZSuite Tech. And today we have two great people here to talk to you about growing commercial deposits, tactics to win property management relationships. And so really thinking through how we can win in the property management space, how you can win in the property management space. Just a few housekeeping items as we're getting started. This will be recorded and you will receive a copy of the recording afterwards. You don't have to ask for that. We will be sending it to you. You'll also be receiving separately a survey that just asks for your feedback. We would love to know what you think of this, if the information is useful, really anything that you want to tell us about it. So please fill out that survey. And additionally, we have compiled all of this information, or at least the most important parts of it, into a downloadable, what we're calling a battle card. And so you'll also receive a copy of that battle card next week. And you'll be able to share any of that information that you want to. So with that, I'm going to introduce you to our two speakers today. We have Nathan Baumeister, who is the CEO and co-founder of ZSuite Tech, and Colleen Jamison, who is our Enterprise Client Success Manager. She is having a little bit of a technical issue with her video right now, but she is here and excited to speak with you. So with that, I'm going to go away, but I will be monitoring the chat. So if you have any questions, I would love to answer them there. We will have some time for questions later too. And I'd love to get it started. If you could just chime in the chat as to where you are calling in from today. It's always so fun to see where across the country everybody's coming from. Nathan, take it away.
Awesome. Thank you very much for that introduction. Very excited to be being joined with Colleen to talk about this particular topic. What I'd like to do is just share a little bit what we're going to talk about from an agenda perspective. So we'll spend about 40 minutes talking about how to sell to property managers. And there's really three subtopics that we have. Why property managers, who are they, and how can we reach them? We'll have plenty of time for Q&A. And then as we wrap up the end, we will have a brief demo of our different applications that could help you from a technology perspective. But that's at the end. So in case you're already familiar with the products or you're not interested in seeing those demos, you can go ahead and jump off, but not miss any of the meat and potatoes of the call, if you will. So why property managers and landlords make great banking clients? Well, the first thing is of course, you need to look at the overall full relationship that a property manager and or landlord could have. We are going to talk about the difference of property managers and landlords. There's a little bit of a concentric circle going on from that perspective. We wanted to share a little bit about one client that we work with. They have over 1,000 landlords and property managers that they bank. Across the entire spectrum, those landlords and property managers have over $70 million in deposits at that institution. Those $70 million kind of fall into three different types of deposit categories. You have their operating accounts, you have their reserve accounts or money that they're holding for a specified period of time where they're trying to earn specific rates. And then, of course, you have their security deposits as well. So across there, they have $72 million in deposits. That exact same client base also has over $170 million of loans on the books also. So as you look at that full relationship of what they can have, it's definitely on the deposit side as well as on the loan side. Lastly, they oftentimes are heavy users of your different cash management offerings as you have offered to them. So there is also an opportunity where they could be driving non-interest income as well. So there's a lot of different reasons why these landlords and property managers really do make wonderful banking clients. So as a breakdown between property managers and landlords, and we can kind of look at it from a unit perspective, not all landlords are property managers. Neither are all property managers landlords, but you do have some that are one or the other. So the definition between the two, property manager is the one that is going to be managing the day-to-day operations, taking care of tenants, collecting rent, taking care of facility tickets, negotiating contracts, all those different types of things. And then the landlords are the people that actually own it. So when you look at the lower number of units, like the one unit, 71% are self-managed, 37% of all units are self-managed. But as you can see, as you get up with more and more units, you often start seeing more adoption of a property manager actually managing the properties who are doing so professionally rather than self-managing it. Oftentimes, you will find that property managers actually do have at least some of their portfolio as a landlord that they own, but they do also do it for other folks as well. So when you look at the different aspects of the opportunities to be able to grow, one of the big things that we already discussed, but want to dive into a little bit deeper is the loan opportunities for them. Both landlords as well as property managers are both looking at opportunities to grow. So 92% of property managers plan to expand their portfolios in the next 2 years. That's going to be through two different ways. They might actually build out their own properties, right? So they're actually purchasing properties, which are a great demand from there. But others might actually do this through acquisitions, where they get other property managers who already have a lot of clients that they are managing properties for. They go ahead and acquire those companies, and they can manage it. So there are regular commercial loan opportunities as a business owner looking to expand. And then 64% also offer services around purchasing, selling, or brokering properties for their clients. So when you think of landlords or property managers, lots of times that's not their only business. They are doing other things. Many of them are real estate agents or brokers as well. So it's interesting to be able to look at that, because if you do, as you have better and better relationships with brokers, if you do anything on the mortgage lending side, obviously they are wonderful referral sources for growth. All right, so just another look of the similar data. 92% of property management companies plan to grow. 40% of all landlords plan to grow. So there still is a lot of people that are looking for acquisition. Typically in an economic downturn, individual purchases of homes do definitely become less. However, rent becomes more and more interesting. So those that can actually invest in properties that they can later rent out definitely oftentimes pick up during economic downturns or times when interest rates are higher. So as we switch to the other side of the balance sheet, from the loan side to the deposit side, a lot of great core deposit opportunities when you're working with landlords and property managers. They definitely have stable recurring revenue as a business in of themselves. That also means that they have money that is continually coming in and out of their operating accounts, as well as oftentimes they do have those additional reserves that they want to put in a safe place as long as they can get a good yield. In addition to that, most landlords are still holding deposits and security deposits. About half of the states in the United States do have different requirements, some of which is where the interest has to be paid to the tenant. In those cases, their security deposits oftentimes aren't interest sensitive because they're not getting the benefits of the interest. So they could be great low-cost core deposits. In the states that don't require interest, it might be an opportunity to be able to offer a good yield, to be competitive for those particular deposits, and/or can just help build out that relationship. So a lot of great opportunities there. So as we break down the space of property managers and landlords, it's important to note that there are definitely different segments. We've touched on these a little bit, kind of the self-managed versus professionally managed. Now we're going to take a little bit of a different view of, based off of the number of units, how they actually interact. So you see four categories here: mom and pops, small business, medium business, large business. These number of units aren't going to be specific, but they're more directional of the types of different property managers and landlords you might run across. As you look across the United States, the large majority are in that mom and pop area, 10 to 11 million throughout the United States. They own 75% of the properties, but only 45% of the units. And as you think about that, that definitely makes sense. The 1 to 2 million folks that are in the business side, though they only own 25% of the properties, they represent 55% of the units. And that's because as they invest in properties, they're typically going to do ones with larger units. Apartment complexes, of course, being the largest example of that. So your mom and pops are typically going to have single family housing and or duplexes, or if some of you that are in the New England area, triple deckers, et cetera. Whereas you're going to see more apartment complexes as you go to those larger businesses. So deposit wise, obviously the larger businesses have larger operating accounts and reserve accounts. But in addition to that, as you have more units that you're managing from a security deposit side, you can see that the opportunity for the types of deposits that are sitting in those types of accounts are pretty high. A lot of opportunity to be able to grow from that perspective. So as you're thinking about the, ROI, if you will, on the deposit side of the relationship, lots of different ways to be able to look at it. Some of you, as you look at deposit profitability, might be using net interest margins, and you can look at that based off of the different types of deposits you might be able to have. Some back of the envelope math to be able to help you understand what are those opportunities that exist. So to wrap it all up, they make wonderful, wonderful, wonderful commercial banking clients for multiple different reasons. They can help all across the balance sheet, inclusive of non-interest income. There's a lot of opportunity even now in this marketplace to be able to bank those. As we look at how to serve them, it's important to understand who they are and what they use. So as you talk about mom and pop landlords and property managers, oftentimes they're not using a lot of technology providers to help them run their business. They might be using an outsourced accountant. They might be using QuickBooks, but more than likely, they're just doing a lot of Excel spreadsheets and running things directly out of their bank account. As you get to the larger property managers that have multiple units, there is a whole ecosystem of property technology that has been well developed to be able to hold the needs of these property managers very, very well. As you can see, there's a couple of them here that we've listed, but there's definitely more in the marketplace. Appfolio, RealPage, Propertyware, Apartments.com, Yardi, Buildium, etc. These are the types of folks that are building software to be able to help these property managers and landlords manage their whole business. Oftentimes, these are called enterprise systems, right? So as you look for opportunities of how you can help a property manager and what types of services they might use at the bank, it's important to understand from a technology perspective, who are they using and how are they using them? Because that will help you identify what opportunities you might have to be able to serve them. And, we have to share, just a few days ago, this came out, that JP Morgan Chase wants to disrupt the rent check with its payments platform for landlord and tenants. It just came out that Chase is building out a platform. They still haven't set a date for when that's going to be available. It is focused on replacing checks for rent rather than, and to help them do it electronically. So if you go back to kind of that sector or segments that we were looking at, this would be focused more on those mom and pops. But it's important to understand that there must be a large opportunity here for multiple reasons. But one of the largest banks in the world are building out specific partnerships and specific solutions to be able to help in this particular industry. So the important thing to note, like I said, as you're looking at who you're talking to and what you need to do for them, you have to remember that you aren't going to necessarily be everything for a property manager. There are property managers that need those more complex tools like Buildium and Appfolio. Your banking services are not going to replace those in most cases. The question is, where are there pain points from a banking relationship? And how can you work with those different providers in different ways to help them augment their overall relationships? And then when it comes to mom and pops, there might be more of an opportunity to be able to go there and see what happens from that perspective. So with that, we want to go to the next side of the agenda, which is getting to know these property managers. And we're going to go ahead and invite Colleen to jump in here.
Hey, everybody. So part of getting to know property managers is really understanding their pain points and really trying to put yourself in their shoes, such as a day in the life of a property manager. So we can go to the next slide. So for example, let's see. If it is not the first week of the month, a property manager may be worried about service calls, maintenance issues, property issues, vendor management. If it is the first of the month, they're worried about all of those things plus rent collection. So in addition, always issues with filling vacancies, screening tenants, tracking and providing data to their managers. All of these things are relevant to the understanding what a property manager is really going through. Going to the next slide. So putting faces to the facts. I wish I could put a face to my fact right now, but I can't. But if we took some time and actually interviewed some property managers to better understand what it was like, what their experience was like. So our first one was Jason. Meet Jason. He is owner, partner, property manager. He has over 500 units under management, and he is located in Texas. So as a function of location, he's going to have different regulations and compliance issues around security deposits. But his perspective of how he chose a bank was relevant. He said, if you got $2 million in someone's bank and they're going, you can only do 8 withdrawals a month, and then after the 8th withdrawal, we're going to charge you 25% per withdrawal, I'm going to say, okay, next. So what really mattered to Jason in choosing a financial institution is the return he was going to get on those $2 million, easy access to capital. And how he defined this was he wanted to avoid the mortgage qualification meat grinder, as he said. But perhaps a more relevant and ubiquitous demand was faster money movement. So he actually described to us what that money movement scenario was like for him. So he described it as the first thing is, first of the month, the tenant pays rent via a property management tool, and it could take up to 72 hours to clear into that property management's bank, and it costs the PM along the way. Next, property manager pays the owner, and it could take up to 72 hours for that money to get into the owner's bank. With weekends in the middle, if the rent is paid on the 3rd, the owner may not get that money until the 11th of the month. And this is a big pain point for him and a pain point for the owners as well. So Nathan, why don't you introduce us to Igor?
All right. So Igor, he is a business manager. He has about 400 units under management, focused in New Jersey. Currently banking with Blue Foundry Bank. Mentioned that they originally created that relationship with Blue Foundry for a construction loan. And they had worked with other banks, but as they worked with Blue Foundry, they just found that the service was great. They focused a lot on them and just decided to switch everything over to it. Igor and his family created this business to manage their own properties because they couldn't find a suitable third-party vendor. So it is something that this is a self-managed. So that's what it looks like from that perspective. So what are the things that was important to Igor as he was making the decision of where to bank? So first, he wanted to make sure that there was someone that he could call and that he could get help with. It was important to him that there was a person or a group of people that were actually helping him out. He was looking for technology tools that could help his accounting team to be able to help with various different aspects of the payment collection. In New Jersey, unlike Texas, there were some very specific regulations on how to manage tenant security deposit accounts in New Jersey. So the fact that Blue Foundry had something to help automate that was extremely helpful for them. Since Igor is managing the business for his family, basically, that own it, for him specifically, money movement was not a huge pain point because he didn't have the two-step process that the previous one did. where they needed to, the property manager collected the money and then they needed to get that money to the landlord themselves. So for them, not as big of a decision point from that perspective. And now, Colleen, you want to introduce us to Amanda?
So here's Amanda. And we interviewed Amanda because she brought yet another perspective to our wealth of knowledge about property managers. So Amanda is not only a property manager, she's an owner, but she's also a broker. And because of that kind of three-prong approach, she had a unique set of demands about what she wanted. So the things that she doesn't have a lot of units, but she has a lot of exposure through the real estate agents that she's a broker for. So from a bank, she wants the same things that we heard from Jason, but technology was a big part of what she was looking for. Definitely a common feature among younger property owners that we can see. So let's just summarize to the next slide. The things that we saw from our interviews were that there is a generational shift in who property managers are. Historically, they've definitely been more, Gen Z, baby boomers, but as the younger generation comes in, their values are different and their demands are different. Speed of payment always matters. That hasn't changed. Creative pricing is important, both on the deposit side and the lending side for this particular segment. But technology can be a key driver in creating a competitive advantage and a unique value proposition to these property managers.
And one other thing, Colleen, that I'd throw in there is the exercise that we did to interview these 3 property managers and landlords is something that you absolutely can and should do with any property manager that you speak to. All of them are going to be unique. And it's through that conversation of asking and just listening, what are your pain points? What do you struggle with as a business? And what have you struggled with in the past with other banking relationships that you can find very specified insight for you and the folks that you're talking to directly.
Yeah, Nathan, I love that because there's nothing that we did that anybody can't do. It really is just asking those questions and listening and being curious, right? All right, so how do you reach property managers? Creating move through this, yep. So finding ways to add value is something that we all want to do in talking to potential customers. But again, if you go back to thinking about the day in the life of a property manager, there's a lot that's out of their control. They don't necessarily know if a water heater is going to break or a tenant's going to leave early, or if somebody's going to want to report immediately. So in really reaching out to them from a financial services perspective, we can address things that we do have control over. So we can provide some peace of mind. We can provide some relief for the kind of chaotic life that property managers might experience. So in meeting their needs, I think the underlying deliverable here is to be generous. We know the next generation of property managers want guidance on compliance and liability. Banks can be generous in providing that kind of guidance. We can be generous in providing options for speed of payment. There are ways that banking folks know how to help their clients with this that the property managers are not going to necessarily be aware of. Obviously, we can be generous in exploring creative pricing and lending solutions. But maybe most importantly, we can be generous in offering tools that complement their operation. These might be remote deposit capture. They might be rent collection tools. They might be security deposit management or commercial escrow tools. And finally, we can be generous in using our network to help fill their vendor, tenant, and client gaps. So where are these property managers? Well, the good news is there's a bunch of them. And the very best, most important place to start is your own data. Nobody else has access to your data. You have a unique position to explore your own data, your loan data in particular, to really call out if there are opportunities in there in which you would have a leg up in the relationship. LinkedIn, most widely used professional network available today. And the other options I think we're aware of, but they bear repeating. Google search, property finder websites, local association meetings, Chamber of Commerce, personal referrals. And then there are some construction databases such as Construct Connect or Dodge Data that might be a source. If you only get one lead out of it and it closes, it's worth it. And then, of course, your own city or municipality, which does have information about new developments in your area. Getting involved with industry associations is also something that has merit, and here's why. There's a whole bunch of the target market associated with them, but these industry associations also are a wealth of data on trends, on what's happening, on what the segment is focused on. And those are things, again, that you can be generous with in sharing. Some of the biggies, National Association of Realtors has 1.4 million members. They are actually the largest trade union in the United States. National Apartment Association has 82,000 members, and they are a leading voice in rental housing industry, often smaller companies, so it's a little bit different segment. The Institute of Real Estate Management has 20,000 members. And again, they are a source of learning, certification, and networking that you could take advantage of as well. And the National Association of Residential Property Managers was mentioned in a number of our interviews. They have a smaller base, but they do have local chapters and a speaking database. So finally, in creating visibility, that word of being generous comes back. Be generous in sharing valuable information, sponsoring continuing education classes for this segment, offering to speak at their industry events. Listen to and learn from existing clients. That's something you do all the time, but it really can't be overstated, having that curiosity about what is going on with them and their pain points. Pursuing endorsements by industry associations if you can, and partner with local experts. Are there any questions?
Hey everyone, we wrapped up our content a little bit early, and so if there is any space for or any interest in asking questions about this, we would love to hear it. Names of the construction databases. Colleen, do you want to take that?
Yeah. The ones that I have noted are Construct Connect is one, and Dodge Data is a second one.
Mm-hmm. And those are large databases that that companies use to find vendors for their different types of construction products. And so if you look at those databases, there is some cost to have full access to them, but there is information you can look at for free or get a sample of information as well. And you can see what kinds of property management, or I'm sorry, multifamily unit construction is happening in your area. And you can get names of lots of the different contacts involved. And Colleen, one thing I wanted to ask about, when you were talking about the putting on the sessions, do you have any ideas or have you seen any good examples of different types of educational sessions that people could put on?
Oh, absolutely. I just did some brief exploration on trends in property management, and a lot of stuff came up for reports on what's going on. This is an area where, again, there is a lot of information, and a lot of property managers simply don't have time to access that information themselves. So a simple Google search really turned up quite a bit for me.
That's great. And I will just add to that. A lot of people in the realtor space and some in the property management space as well have to get annual certifications, or they are looking for additional certifications to add to their resumes. And so if it's something that they all have to be at, then sponsoring them or figuring out a way to present some of that information can be a really valuable networking tool. Maria asked if you're going to get a copy of the deck. You're not going to get this deck per se, but we will be sending out that battle card, and you'll get a copy of the presentation as well.
Yeah, the other thing that I would add in the educational content perspective, one of the things that a lot of bankers forget about is that there's a lot of companies that are trying to sell to you, like us, for example. And so as you attend conferences and you see various folks doing different B2B, business to business marketing tactics, if it works for you, lots of times it'll actually work for the commercial segments that you're going after as well. So when you go to a banking conference, who's speaking at those events? And if it is an expert, are there people sponsoring those activities? You know, there's a lot of those things that you could take from your own experience that then you can apply to your own business to use similar tactics.
Great. Yes, Joe asked about the video. We will be sending out a copy of or recording of the video afterwards. So great. Well, it seems like that might be the questions for today. So this is the end of the kind of initial official presentation. If you would like to stay on, Nathan will be going through our key product in a short demo. And again, after you log out, please do fill out the survey and let us know what you thought, or what else we could provide on a different vertical next time.
Yeah, we love talking about multiple different verticals, for sure. Excited to start with this one, but we're going to continue to do a series of these with many different commercial verticals so that we can continue to learn together, and you'll see similar formats where we're doing different interviews and such. Happy to walk through one of our platforms. It's called the ZSuite platform. As it relates to what we talked about with property managers. As we mentioned, in many of the states, management of tenant security deposit accounts is a difficult thing for people to be able to work through. The reason is because there are oftentimes very specific laws that have been passed on how security deposits need to be managed. So you have some things as simple as all of the interest that's earned on security deposits actually needs to go to the tenant. When you peel back the onion on what that actually means for the property manager to do, well, first and foremost, the property manager is going to have to track the balances by tenant in order to understand what interest goes to which tenant. On top of that, there's the IRS reporting requirements. Where they're going to have to produce a 1099 INT form, of course, depending on how much interest that they're going to earn. But that also means then you need to get a W-9 or W-8 form. So when you start adding on a qualification just such as that, all of a sudden it requires a different level of banking that is needed to manage these tenant security deposit accounts that otherwise you wouldn't have to. So for example, instead of just having them kind of pop into the operating account, which is what some landlords do, unfortunately, in some of the states where there aren't any regulations, some of them will just have one big account where they all sit and just kind of sits in a savings account. But if they don't need to give the interest to the tenant at the end, they don't need to understand the breakdown of the balances, though they still should have the breakdown of the balances. But this creates an opportunity for those of you that are in those various different states. In most states, it is statewide regulation, but we do have a couple states where there are specific municipalities that focus on these in a different type of way. So, for example, California statewide does not have a lot of tenant security deposit laws. However, there's certain municipalities within California that do, and they can vary from district to district in the fact that you're working with them. Obviously, for some of you that are in other states that have high levels of complexity that go well beyond just the interest requirements, there's not just a lot of pain that goes in from banking those types of accounts, but there's also pain involved with the landlords and property managers and them trying to fulfill the requirements that they need to do. And that is why we have developed our product, ZSuite. So with that, I'm going to go ahead and share my screen and share that with you and do a quick and brief demo. So ZSuite is built to be able to help with multiple different use cases when it comes to commercial escrow and sub-accounting. Property managers are one of those. There are multiple use cases on how a property manager might want to use sub-accounting. The main one I'm going to demo and talk about today is going to be tenant security deposit accounts, but I will briefly touch on how else they might be able to use it. So the property managers oftentimes do have complex account structures that are set up for multiple different entities because they're managing properties for a bunch of different owners. So you might see a large-scale property manager has hundreds of different accounts that they're opening and closing based off of who they're managing properties for. They want to make sure that the operating expenses and the rent are going into those appropriate accounts. They are able to use the ZSuite platform to be able to have virtual spin-up accounts for those different operating entities, be able to assign the appropriate beneficiary or owner of those accounts that are outside of the property management company. And they're able to do that all within this platform. So that's one use case. But the other use case is going to be on tenant security deposit accounts. And as I mentioned, that's what I'm going to focus on here. So ZSuite is a web-based application that's available on any web browser. It's responsive and adaptive, so no matter which format you use it, it will automatically readjust. The bank itself has access to all the commercial clients that are using this platform. As I mentioned today, we're going to focus on property managers, but there's a whole bunch of different other commercial clients that use this as well. But as the bank has access, you can drill down to any of your clients. I'm going to drive down into Second Rosedale Realty Corp as a property manager, with the main use case being the management of security deposits. So the bank has access to be able to go through this, but more importantly, the landlord themselves could self-serve in the management of these.
Nathan, you're not sharing your screen anymore. Could you do that again?
I absolutely can.
Thank you.
All right. Is it showing up now?
Yep.
Excellent. So this is the view for Second Rosedale Realty Corp. They're able to see all of their escrow accounts, in this case, tenant security deposit accounts, but they have this nice way to be able to manage them however they want with our foldering system. So as they bring on new buildings, or maybe they bring on new owners, they can create additional folders where they can put these different sub-accounts or escrow accounts for them. And these can go multiple layers deep. So in this case, they just have different folders for different buildings. And then under those buildings, they have their security deposit accounts. But let's say these three buildings were all owned by the same owner, and these two buildings were a different owner. They could create a different file folder structure where they have the owner at the top level and then the buildings from there. From here, they're able to self-serve to do a whole bunch of things. They can open up those new sub-accounts to be able to track the balances at the sub-account level. If it is an interest-bearing account, they're able to go all the way down to the point of being able to name them whatever they need to, as well as they could put the beneficiary information on the platform itself so that it could be easy to search for. We can drop it in the appropriate folder. Since this would be an interest-bearing account, we could actually get the W-9 information through DocuSign as we email the beneficiary, or if they already have a process in which they're comfortable with getting the W-9 when they sign a lease or whatnot, they can manually upload manually upload that data and fill out that information. If they don't have it now, they can always finish it later, at which point their sub-account would be pending until which time this is complete, which they can come back and do anytime they need to. In addition to being able to open up these sub-accounts, they can also go into any of the individual sub-accounts to take actions that are required. So as I go into a particular sub-account, you can see that we have the balances that are accruing. You can change out any of the beneficiary information that might be changing. You can transfer funds in and out of these sub-accounts, as well as closing the sub-accounts. That any accounts that are, any documents that are associated with this accounts can sit right here where they can easily access all the information. So again, this is something that the landlord or property manager could do on their own. They could use the user interface like I just showed you. However, if they do have data, we could receive that data to be able to take these actions, especially as they're just getting started. We could do bulk uploads of their properties, or let's say Second Rosedale Realty Corp buys a new building with 1,000 units or whatnot. They can easily provide that data to you all at the bank, and then subsequently to us, so that we can upload all that information and do it just through a data upload rather than manually entering all of those things. Or if they even go as far to they have a software system that has API connections, we can actually hook up this platform directly to that to be able to get the API platform. So this in of itself is a huge benefit for these landlords and property managers that are currently having to track interest or do other things for these deposits at an individual account level, where they now can self-serve to do all of those things in a very easy fashion. Now, if we have any Spinal Tap fans, how do we take that to an 11? Well, the way that we take it to 11 is we can also build templates at the bank level that we can then apply to folks like Second Rosedale Realty Corp to help manage things beyond just the account opening and moving of funds. So as a quick example, I'll pick on New Jersey and New York. They're right next to each other, but I'll pick on them because even though they're right next to each other, they have different rules and what can happen on tenant security deposit accounts. We build templates for New York tenant security and New Jersey tenant security, and then those templates could then be applied. Let's say Second Rosedale Realty Corp has half of their properties are in New Jersey and half of them are in New York. We can actually apply those different templates separately to help manage those rules. So just as a quick example, in New Jersey, the interest owner is the beneficiary, which is the tenant. They do need to earn interest. That interest needs to go to the tenant, and it needs to be dispersed on an annual basis. It can't actually just sit in the account itself. So it needs to be sent out. There's also a requirement that there's an account opening notification that is sent to the tenant in New Jersey to let them know where the funds are actually being provided. And then, of course, they need an annual statement along with the 1099 INT form from which to be able to do that annual reporting to the IRS. All of this is part of the template that we can build within ZSuite, so that when they open up a sub-account that's a New Jersey sub-account, all of that can be automated. Now, let's go to one of their properties in New York. Well, it's different in New York. New York does have the same rule that interest needs to be earned, and that interest owner, from a tax perspective, is the beneficiary, is the tenant. However, there's a provision in New York state law where the landlord can actually take back a portion of that interest as a fee. So that is the landlord does not become the interest owner because they receive that as a fee. How much they could take in a fee is limited, but they are able to do that. Again, very different from New Jersey, but those rules and those applications can also reside within the system as a separate template, thereby saving a lot of time and effort for both the bank as well as for the landlord and property manager in trying to follow the different compliance laws. And so as we go state by state and we talk about the differences and nuances, again, I just picked those two states because they're right next to each other and they have these different regulations. We are able to build out those different templates to be able to make their life easy. Now, it's worth mentioning as we talk about ZSuite, as well as our other property management products such as ZRent. Any bank that we work with, we don't just give technology. We actually work with you on a continuous basis to be able to do demos, to be able to help people onboard, answer any questions on how to use the system. So we just expect that we're an extension of your team. So it is not an expectation that anyone at the bank is an expert on these particular things, as we're able to help out across that whole process. The last thing that I would say about ZSuite is you look at the different use cases. Again, we dove deep into tenant security deposit accounts, which does create a great opportunity for those states, for those regulations to exist, However, this platform can be used in very similar manners for other use cases, such as law firms, from their trust accounts to those that might be doing M&As, to law firms that might be holding down payments for real estate transactions, to their IOLA accounts, to even if there's a law firm that's acting as a 1031 exchange qualified intermediary. There are municipalities who use this platform for multiple different things, from surety bonds to custodial accounts to just flat out sub accounting, where they get approval to spend certain dollars on certain amounts, and they want to set that money aside to have the accountability of how that money is set, to multiple other use cases across funeral homes, nursing homes, various different aspects from a healthcare perspective, as well as going into nonprofits, title companies, real estate offices, et cetera. So a lot of different use cases to be able to use the platform as it stands. So I just wanted to, for those of you that wanted a brief run through of the ZSuite platform, wanted to do that specifically as it relates to the property management vertical. We are also happy to provide to the system a run through of a ZRent, which is our rent collection management tool as well. But I'll stop for a second, see if there's anyone that wants to ask any questions about ZSuite before I move on to ZRent. Please feel free to put those questions in the chat.
I see we had Ronnie say something nice about us. I promise you didn't ask her to do that. So thanks, Ronnie. You see that question, Nathan? Other than hiring an attorney or searching on Google, is there a resource that provides information on legal requirements for localities? Great
well,
question.
you know, Jonathan, Google is just so awesome these days, man. Like, it's great. You know, unfortunately, the best resources are actually searching on Google or talking to an attorney that focuses on these systems. There are a couple websites that focus on their content providers that focus on content for property managers, where they've compiled a bunch of different information. I will say the biggest source of information that we use is that in the end, the person or people that are responsible for following the different guidelines for tenant security deposit accounts is the property manager themselves. And so we always make sure, you know, we share with our banks, as well as on behalf of the bank, we share, hey, here's what we've heard is in this state or in this particular municipality. This is how we've seen other people do it. But in the end, they have to make their own decisions. If you're looking for a general synopsis state by state of what's going on, we have done a pass through of the different landlord tenant laws across the different states, where we could give a brief overview. If there's certain states that you're interested in, we can follow up with you later on that, Jonathan, or if any of you also have questions. We typically, when we do it, we do pull up the actual regulations themselves so that we could read through it. We are not lawyers. And we're not providing legal advice, but we do like to understand from a high level what might exist there.
Great. I see your request as well, Peter. So we'll make sure we follow up with both of you on that. And we will have some of the links to different resources around property management, specifically on the battle card that I mentioned. So you'll be able to connect with those.
Any suggestions on best practices for naming sub accounts? Yeah, it's a process for sure. What I have found is every property manager kind of has a different way in which they want to do it. In this case, it sounds, Jonathan, you've run across someone who hasn't really found the way to do it. As we build out sub accounts on the ZSuite platform, the thing that we suggest is to make sure that they understand how they're going to look it up and how they're going to use the data. So if they're going to try to tie back the sub accounts in the ZSuite platform back to another software solution that they use, they might have a CRM, it might be in QuickBooks, it might be in like AppFolio or Yardi or Buildium or whatnot. We do suggest that they put in whatever that unique identifier is back to the customer record on their enterprise system. Because if they do that, when they pull down the data from ZSuite, they can easily do a match back to other data in other systems. Now, that being said, if you just put a number there, then it's very, very hard to be able to find afterwards if there's something else that you're looking for. So that's one of the reasons we built within the system a flexible field where they can type things in, because they could put a unique identifier, they can put the beneficiary name, they can put the unit name as well. So across the board, they can, however they want to search, they can find it there. And this is also one of the big reasons that we built that foldering system. If you're just managing 5 properties, it's not a big deal. If you're managing thousands of properties across multiple states, across multiple property managers, having that foldering system where you drill down into the folder and then you go into the sub account definitely helps out from that perspective. If you are having checks or whatnot, and you have the beneficiary name, then that might be something that you could easily search. I don't know if you saw on the ZSuite platform where you could actually just search in a sub account and it will take you to that sub account right away, or any sub account that matches that particular search criteria. But anyways, those are some thoughts. Obviously, talking to a property manager themselves and finding out how they would like to do it, or providing some of those suggestions. A lot of them will kind of dive back into it from there. Yeah, Jonathan, it's not, your question is do most banks that partner with you charge for your services? Definitely not off limits. Happy to talk about that. In the end, we've seen a little bit across the board of different banks doing different things. And there's different answers depending on if we're talking about the ZSuite platform, which is the platform used to manage the escrow and sub accounts in this particular use case, tenant security deposits. And the other one is ZRent, which is a rent collection tool targeted towards the same target market that Chase was talking about. It's just we've been offering this product for quite a while longer, ever before Chase offered it, which is basically mom and pop landlords or folks that are collecting their rent in an ad hoc fashion. So I'll separate the two products as I answer this question. On the ZSuite platform, the majority of our banking clients offer it as part of a bundle for their overall cash management or treasury management system, and it becomes part of their relationship pricing. So what I mean by that is, as you sit down as a commercial banker with a property manager and you find out what their overall needs are, they need ACH manager, they need online banking, mobile remote deposit capture isn't going to work out. They actually need an RDC machine in their office. They are going to take out these types of loans and they're going to keep this many deposits. You look at the entire relationship and you say, okay, and they're going to use ZSuite. You take that entire relationship into account when you provide a deposit rate, as you provide a loan rate, as you provide what the analysis fees are, and those types of things. So that's the way the majority of our banks have gone to market. We do have some banks who've gone out and just say, hey, it's free to use and just use it, right? Some do that. Oftentimes these are banks that have a high need of deposits, as well as they are happy to get the deposits, but have a lower non-interest expense in supporting these types of services. So they're trying to use that tactic of getting a service out there that doesn't cost any additional money to be able to get attention and then try and get some volume. And then we do have a couple banking clients that have a list price for ZSuite specifically. And there's different ways that they've set that up. Some of them have put like a fixed monthly fee that exists. Some of them have put like a per account fee. Some of them do waive those fees based off the relationship pricing model, but they are able to use the list price as kind of to build out that value package from that perspective. So that's on the ZSuite side. So I guess I always hate giving the traditional consultant answer of it depends, but it depends. ZRent is a little bit different. We on the ZRent product, the way that we've built it is that it's a common brand. ZSuite is not like this. ZSuite, you can call it whatever you want, but ZRent, it's a common brand. It's common platform that then is, co-branded with the banks that we work with. And so the go-to-market with that particular brand is as long as the rent that they are collecting or the dues that they're collecting are going into your bank account, it's free for them to use, as well as the payment processing is extremely fast. So as long as the rent or the HOA dues that they're collecting comes back into the operating account at your bank or the bank that's sponsoring ZRent, they'll get that within 1 business day, and no fees. If they do have the rent that they're collecting going into an account outside of your bank from that which it's being sponsored, then it takes 4 to 5 business days to process those ACHs. as well as there is a per unit fee. And all of that is disclosed within the ZRent, the ZRent platform and landing page. So thank you very much for those questions. That gave me a lot of content to talk through, Jonathan, and look forward to working with your team on onboarding ZSuite and for the launch.
Great. Well, thanks so much to everybody for joining in today. We are going to be on for a few more minutes if you want to ask more questions, but this is officially the official end. So have a great day, everybody, and keep your eyes open for our next webinar coming early next year. Thanks, Son. Thanks, Karen. All right, people are trickling off. I think we're going to call it. Thanks, Nathan. Thanks, Colleen.
Absolutely. Bye. Thanks for putting this together.
Thanks, Joe.
Bye, everybody.